Why is real estate such a powerful tool for building wealth? When I was a kid, I looked up to my grandpa who bought a couple properties in the Bay Area back in the 50s when they were dirt cheap. And they went up like crazy in price, and the rent went up as well like crazy. So he was able to not only live very comfortably from the rental income from those properties, but he was also able to help cover part of my college tuition and that of my brothers as well. So my grandpa effectively created generational wealth for our family. If you don't know me, my name is Ryan Chaw. I'm a pharmacist turned real estate investor, and I help real estate investors make that leap into real estate investing. So in this video, let's go ahead and talk about why real estate is the most powerful tool in the world for building wealth. Hands down, I will say that real estate totally beats out stocks. If you were to compare investing in the S&P 500 versus buying real estate just knocks it out of the park. As long as you do it correctly, of course. The first reason why real estate is one of the best ways to build wealth is through something called appreciation. Appreciation is just a fancy term to say that the property goes up in value over time. On average, a property will go up about 3% per year if you buy in the United States. Now, that doesn't sound like a lot of money, but when you take into account you use something called leverage, which is a fancy term for just putting a 20% down payment on a property, you'll find that the return is much more than 3%, and I'll show you exactly how. So let's say you hypothetically purchase a $500,000 property. Now don't worry, you don't have to buy a $500,000 property. I'm just using this as an example because the numbers work out a lot easier. So putting a 20% down payment on a $500,000 property means you're putting down $100,000. If the property is going up 3% per year, that means it's going up about $15,000 a year. Now here's where the magic happens. You have $15,000 return every single year, and if you divide it by how much you put in, which was only $100,000, that means you make a 15% return. 15,000 divided by 100,000 is 15%. So even though the appreciation was only 3%, you're still making a 15% return on your investment with that. Now the average return on the S&P 500 has been around 7 to 10% per year. So 15% really blows it out of the park. And that's just the appreciation on the property. Now the second way that real estate makes you money is something called cash flow, which is basically your rental income minus your mortgage payment minus miscellaneous expenses. Typically, I want my cash flow to be at least $1,000 to $1,500 per month on each property net. The way I'm able to do this personally is I rent by the bedroom. So I'll rent out each room for about $600 to $700 per room, and I'll get the house to about 6 bedrooms. 6 bedrooms times $600 to $700 per room is anywhere from $3,600 to $4,200 per month in rental income. That's how I make a really good amount of cash flow on my properties. What's great about cash flow is that it pays you every single month. Versus appreciation, you can't get that every single month. That's just an increase in the value of the house that you don't get back unless you sell the property or if you do a cash out refinance or a home equity line of credit. Now, I'm going to go ahead and talk about that later in this video, so stay tuned for that. The reason why they say that real estate leads to financial freedom is because of the cash flow. Because you're paid on a monthly basis, kind of like a paycheck, you are able to actually replace your W-2 job income with the rental income from your real estate. And when it's completely replaced, that means you are financially free. You can actually live off of your rental income. In my opinion, that's one of the most powerful ways real estate creates real wealth. And I was able to use real estate to actually retire from my full-time pharmacist job at the age of 31. All right, now let's talk about the third reason why real estate makes you wealth. That is called loan paydown or equity buildup. Basically what happens is every single month your tenants are paying off your mortgage, and a little bit of that mortgage goes towards the property every single month, so you own more and more of the property while the bank owns less and less of it as time goes on. What's really cool about this is that it accelerates over time. So at the beginning, you're paying a little bit, maybe a couple $100 per month that's towards the principal on the loan. But later on, years down the road, you're paying more like maybe $1,000 per month towards the principal. And so that's why real estate is really a patience game, because in 8 to 10 years, that's when you see acceleration of the loan pay down and you own more and more equity. And so for a lot of real estate investors, you'll see this exponential growth graph where instead of a straight line growth like this, it will go more like a hockey stick growth. Because as you get towards your 10th year or 20th year of real estate investing, you really see acceleration of that loan pay down. Not to mention, rents will also increase, etc., etc. Now, the fourth benefit I would like to mention is that real estate rents and home prices follow inflation. In fact, a portion of CPI, which is a measure for inflation that we use, is the average rent that people pay per month. So, by definition, rent increases with inflation. So, even though you make the same payment towards your mortgage every month, each year, your rental income on average will keep up with inflation or even go faster than inflation if you are in a popular city with a lot of job growth. Okay, the fifth and final reason why real estate builds wealth is through tax benefits that you get from it. So, usually at your W 2 job, you have your income and then you're taxed on that income, and whatever is left, you pay your expenses with. Well, real estate is different. You make this rental income, and instead of being taxed directly on the rental income, you're allowed to take what we call deductions from the rental income, which are just typical expenses to maintain the house and run the business. And then finally, you pay your taxes after that. Now, it seems like a subtle difference, but you actually save more money by deducting out your expenses first from your rental income and then finally getting taxed on whatever is left over after you deduct out your expenses. For real estate, there's also this thing called depreciation, which some people call a phantom deduction because it doesn't really exist. The IRS basically assumes that you have wear and tear on the house. So it allows you to deduct anywhere from a couple thousand to $10,000 or $20,000 on the property depending on how much you bought it for. So what depreciation basically allows you to do is not have to pay taxes on the first $5,000 to $10,000 in profit that you're making on that property. Now, that's an oversimplification, but depending on what the price of your property is, you're allowed to deduct a certain portion of that every single year for depreciation, even though that you haven't actually spent that money. Now, you might be wondering how I was able to become a millionaire through real estate investing in less than 5 years. Well, it sounds complicated, but it was actually pretty simple. What I did was I bought a property back in 2016 for $262,000 in Stockton, California. Now, this property appreciated over the years, and I was able to take out $100,000 in equity from that property to buy 2 more properties. So I basically put $50,000 on one property and $50,000 on another, and I was able to scale pretty rapidly by doing that. The process of taking out equity from the property can be done through a cash out refinance or through a home equity line of credit, also known as a HELOC. Now, I have other videos on HELOCs, and you can actually find those videos on my channel if you want to learn more. But basically, when I bought that first property, I ended up essentially buying 3 properties because I was able to leverage the equity on that first one to buy 2 more. Eventually, I ended up having 5 properties in California, and each property went up an average of $21,000 a year in appreciation. And so for 5 properties, that means I was making over $100,000 every year just from the appreciation alone. This is not accounting the cash flow, the rent increases, the equity pay down and tax benefits, etc. And so very quickly, I was able to actually become a millionaire. In fact, today I'm a multimillionaire and I own 15 properties. So you can see how powerful real estate actually was for me. Now, the advice I would give beginners out there is the most important thing you have to realize is you have to get that first property as soon as you can. There's a saying out there, don't wait and then buy. Instead, buy now and then wait. Because there's so many people out there trying to time the market and trying to buy properties at the right time. What I did is I bought every single year since 2016. Every single year without fail, from 2016 until now, 2024, I bought at least 1 property. And I did whatever I could to essentially maintain that. But to get the first one isn't as complicated as you think. What you can do is something called a house hack, where you live in the house and then you rent out the other bedrooms to housemates. and then you can repeat that every single year. What's good about the house hack is you can put as low as a 3 to 3.5% down payment. So let's say you're buying a $300,000 house, your down payment's only going to be about $10,000. So a lot of people get started by doing this. The reason why you want to get started as soon as possible is because real estate is really a time game. As we talked about appreciation, the loan pay down accelerating over time, and it really is an exponential growth graph, which looks again like a hockey stick. So at the beginning, you'll have kind of like a slow growth, but around the middle, around year 5 or 8 or so, you're going to start really seeing exponential growth. And that's how real estate works. Hopefully that's inspirational for you guys, and hopefully you can see how powerful real estate was for me and the huge impact it had on my life. And I know it can have a very similar impact for your life as well if you do it right. If you enjoyed this video, please don't forget to like and subscribe and share it with your friends who are just getting started in real estate investing. Thank you again for watching, and I'll see you on the next video.